Hi traders, and welcome to the Technical Analysis Market Wrap on Friday the 22nd of April. So we had a pretty strong start to the week with a lot of the majors and the indices sort of kicking up, but that last session has certainly given back a lot on especially the indices. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. So we'll start out here with the Aussie USD, and you can see we've had a pretty big sell-off since the 75.70 level that we sold off here a few weeks ago now. And the first touch of support really came at the 50 moving average, and it bounced up there. And that's about I'll put a fib on it, it looks probably about somewhere between the 38.2 to 50 mark. That is there. I always go from the body to body, so it's the easiest way to draw the fib. And you can see it just touched the 50, but it's sort of hovering. It was hovering between the 50 and the 38.2 there, and the 20 moving average did pull it up to a certain extent. Now, it certainly found itself back down at that 50 moving average. Look, it is also a bit of a role reversal zone as well, because we have had resistance and support at these areas, but the thing is now, its next move is going to be a reasonable one way or the other. Like if it keeps pushing down and breaks through these lows and gets past that 200 moving average, you can probably see it getting back into the 71, 72 cent range. So, realistically, what we want to probably see now is it doesn't even have to get to the 200 really. I think if we get a break below that 73.30 level here and we get a new low, and a confirmed low that is, like a daily low, then we've got the lightning bolt on the way down as well. So we've got a daily lightning bolt, which is, it bodes very, very well for a continued short on the Aussie USD. We've got a little bit of support around this level here. This is why I want this level broken. Realistically, we want to see this part broken. So ideally, in a perfect world, we're going to get probably a 73, maybe 20 close. I think that's probably more appropriate. Then we know we've got a confirmed lightning bolt. We've broken some key zones, and we can start targeting these lows again at around that 71.80, which is about 150 pips away from there. So look, good trading. On the flip side, of course, if this does reverse and push up higher, it's got a bit of work to do now, though, by the looks of it. Like I said, that's a pretty big sell-off, and a reversal from here would need to push up higher than the previous high. And if we get a close above there, we do know this is a pretty dangerous area for it, though. Like, we've got that top there and we've got the support through here. So, in my mind, it needs to get back to around that 70, just about 75 really before I get interested in that. And even then, it's only a 60 or 70 pip range. But if it gets up to 75 and closes up there, there is a good 60 or 70 pips there that we can probably target up to the 75, 70 area. And I'll be leaving it there until we get a confirmed break. I wouldn't be trying to push that boundary. So they're the two trades on the Aussie. The short is probably the more preferred now, because MACD is certainly indicating that the weakness is coming. The moving averages are starting to converge on each other now. So I would be erring on the side of the short. But again, it needs a little bit of work to do to actually get past these levels and close around that 73.20 area. All right, we'll move over to the US dollar CAD now. This has been the story of the support again, really. Like, we know we bounced off this level here. We found up that resistance at the roll reversal zone pretty much spot on again, and down it came, and it really did test this level again this week. It's amazing really how often it's come down and touched this level, but we have seen a big session. You can see a big rebound off this 124.50 area. As soon as it touched it, it basically rebounded straight off, and it's gone straight into the 20 moving average. It's caught itself in the middle of nowhere a little bit now, in the sense that it was a trade down here, and only because we know this has been previous support. Normally, I don't like lower highs, but while it got down there, it was a pretty easy pickup, really, to try and trade it back up to the 20 moving average. But that was my trade. I'm not so sure I'm looking for any more than that at this stage. I think that's a pretty reasonable move. And realistically, it's caught in that middle of that funny zone now, where it can find itself in this congestion between the 20 and the 50 moving average again, and of course between the support. So it's probably one of those ones now where I wouldn't trade it long until it actually broke past here. It needs to get past the 126.80 and a close above there for me to actually look at this as a long, and that is a bit of a danger zone anyway. So that's not the most likely scenario. I'd probably be looking at a little bit higher, maybe 120. Probably the 127 is probably the ideal mark. If we get to the 127 and a close above the 127, we've broken through all of this crazy resistance, which is really, really important for this one. And then we can start targeting the 128.50 to 129. So there's still plenty of movement there. The good thing about the CAD is, once you do break these zones, although you've got to wait a little bit longer to actually get there, when you do break them, they are generally sustained moves. So That's what I'll be looking for there, a break above these levels, and a reversal here, of course, on a smaller time frame. If it goes to a smaller time frame and lower lows and lower highs, I'd be looking back down to the 124.50, which is obviously a very strong support, and it's held up quite a few times. So a trade down to here on a scalp, so you can go down to a smaller time frame, and if you get a series of lower highs and lower lows, we've got a very clear target, okay? Even on a 15-minute, you can probably have a look at that, but it's not looking likely at all at the moment, of course, but a series of lower highs and lower lows certainly changes that, and the 124.50 will be your target. All right, US dollar yen, the machine that just keeps on going finally saw a little bit of a pullback, not very much of one, but a little bit of red in the last couple of days. We've picked up again today, though. A little bit more strength was picked up at 128.37. Look, I tried not to get caught up too much in the fundamentals of what's driving this, because sometimes that makes it very difficult to trade and difficult to make decisions on. So, although they are important, that's not really what I base my short-term trades on. This is proving to be a challenge to trade short-term, no question about that, because it's approaching highs that it hasn't seen for a very, very long time, and it is very, very far removed and extended from its 20 moving average. So from a scalping standpoint, it is difficult, but in saying that, if you go to the smaller time frames, and that's what we always do for scalping, we can see once our chart loads up that although it has looked like a very, very big long move up, you can see that every single touch of the 20 moving average and the 50 moving average has effectively given it a reload zone to push in. So realistically, you're able to trade it if you go to the smaller time frames, if you believed in the long and you're only scalping. And look, at the end of the day, if you are scalping, you are only leaving a very little bit on the table when it does eventually turn around and reverse. And if you played that strategy all the way through, you would have got about 20 or 30 trades, I think, in the last few weeks. And not many of them have failed at all. Only the last couple have probably seen that weakness. Now, you could argue that's a double top. It is a double top, really. Not one that I'm wrapped about in the area that it's in, but that said, it is at resistance, and we know that it is struggling to get past this level now, and it has had an extraordinary move, so it is due for a little bit of a reversal, and that double top may be the catalyst for that. So, the neckline is around this level here, and of course, that distance there will come and coincide probably with this little mini roll reversal here, which would be perfect. Probably the 200 may catch up by then on the 1 hour, which would work out as well, but a very minor pattern in the grand scheme of the move on this one, but certainly one that can't be ignored. Nothing short of a break above the 129.38 would convince me to go long on this, and even then I'd only be targeting the round number of about 130. So I'm not really biased either way. I'm happy to go either side on this particular one. So a trade above this level, the 129.40 level, close up there, I'd be targeting the 130, but it's got to be a daily close though, not a 1 hour close. And a short past the neckline on the 1 hour, and I would be targeting down to the 200 moving average on the 1 hour, which is around this 126.80 level. So not bad trading at all on the yen, and you can play it both sides pretty much with not too much bias. All right, well, go have a look at the dollar index now. A big rejection off the 20 moving average, just touch the 20 moving average there, and off she went again. Really, really good trade. The trade was on the euro, of course, but it has had a big sustained move, well above, trying to touch the 101, didn't quite get there. Tried very hard though. And you can see that when it did sell off, it basically just got to the 20 moving average and kicked back completely. That's a very, very bullish sign for it, and it spells a lot of trouble for the euro. So we'll go straight into the euro now, of course, and you can see that basically played out exactly like the dollar index did, but inversely, of course. It had a good little reversal pattern here, though. Like, you were able to get in on that trade. That was certainly a scalping opportunity that you could have taken to get into the 20 moving average. The target was always going to be the 20 moving average on the daily, because it's the one that made the most sense. You don't want to be trying to pick bottoms and go for the big reversals on these ones that have been in a sustained sell-off. That's not really ideal trading. So what you want to be doing, ideally pick the level where you might get a bit of a reversal. Now, we know the 107.80 level is a very, very strong level, has been historically, and has been most recently. So realistically, if it's going to turn around, that's where it's going to turn around from. You go to the smaller time frames and you see the series of higher highs and higher lows. We got that one there, and then off you go up to the 109. Now, of course, sometimes it does overshoot, as it did on the daily. You can see it overshot the 20 moving average by a lot, but again, it reversed back very, very quickly by a lot too. So that's where you want to be taking your profits. You want to be going for those key zones on these ones, keeping your trades fairly short. And if you do that, you're not going to have too many issues. Now, for me, the only way this is going to go long again is if it goes up, makes a high, and closes above the 109, 40 level here, which is done there. It needs to close there on a daily above the 20 moving average and above that high. Then I'd be looking at targeting the next resistance zone, which will be around that 111 area. But failing that, that looks like the harder trade for me at the moment, especially with the dollar index pushing up. So really what we're probably looking for now is a break of the 107.80. If we do get a daily break below there, then I'd be looking for the shorting opportunities to probably short down to around the 106. So if you're going to scalp it though, the scalping zone's right in the middle. You can see it's sitting at 108.35 at the moment. If you're going to scalp it long, I'd only be aiming again for the 108.90. And if you're going to scalp it short, the 107.80 will be bottoming you out on that trade. So just be very mindful that those two zones are very strong. And I'll be keeping the trades fairly short on that one. All right, we'll move over to the US 500. We'll go straight to the daily on this one. Obviously, a very, very big down day. You can see that it hit the 200. It's got well under the 20 and the 50 moving average. It was kind of meandering. I mean, I know it looked like it was a strong week, but realistically, you know, it's only sort of bounced off and it's come off very, very hard off these moving averages. To me, it had a pretty hard road. I'm quite happy for it to be hovering around this level here, up and down. I wouldn't mind if it found a bit of strength around this level again. But, you know, we are going into the seasonally weak time of year in May. So realistically, you know, we're in the midst of earnings season, as you know. So, you know, dependent on, of course, the results, we probably expect a bit more weakness in this one soon. If we get a daily close below this level here overnight, we're going to probably see, you know, a big push down to around the low 43s and maybe even down to the 41.60. I know that sounds a little bit extreme, but we are, you know, going into a seasonally weak time of year. So over the next few weeks, that's probably where I'm expecting it to go. A lot of work to do to go up. You know, I wouldn't be touching this unless it went above 45.20 and closed above there. And then I'd be targeting the 46.40 area. That would be my scalp. But if it closes below the area here around that 43, probably call it 43.50. I'd probably wait for that. A close below 43.50, and I'd be targeting the 42.70 area in the first instance because that's where the support is, and then potentially push down to the 41.50, and then we'll reassess when it gets down there. So yeah, very, very interesting trade, that one. But look, playing exactly like we would want it to though, so I'm not really concerned about that. All right, let's move over to gold. We'll cover this one quickly. You can see we had the big breakout move up to the 2000, which was fantastic. That happened very, very quickly, so you should have been able to take your profit there. That was the one we were targeting out of the break, out of this congestion zone. Sold off pretty quickly from there though, and now it's hovering back above that congestion zone. So look, it's found itself on the 20 moving average again on the daily, which is always a good sign that it has respected it. You can see it tried to push through, and it's pulled back up to the 20 moving average, which is generally a relatively bullish sign that the strength should hopefully return there. It's also a very strong role reversal zone. You can see we had resistance there as well. We know the 1950 is strong. There's no secrets there. So, we would fully expect that it should hold up from that level. If we get a smaller time frame change of trend, series of higher highs and higher lows, we would be targeting the 2000 again. 1980 is a danger area, so $30 from here is a little bit of a danger area. But what we're looking for is a series of higher highs and higher lows, a bit of a double bottom there, as you can see on the 1 hour, a push and close above these moving averages, and we can certainly start to target the 1980 in the first instance, and potentially up to the 2000 if it gets up there really quickly. But in the first instance, the target will definitely be the 1980. Short of that, if we get a close below 1940, like a daily close below 1940, not a 1 hour close, so back below these levels here. If we get a close below these 2 wicks, then we would start targeting the lower band, which is around that 1900, 1910 area. So good trading on gold. I'm not really fussed either way. Whichever way that one breaks, I'd be happy to take that trade because it's setting up quite technically. All right, so I hope everyone's had a great week's trading. I think we had some really good movement and some really good technical setup. So hopefully you were able to take some of those with you and leave some good moves for next week. So I think we're at some very, very key zones again. And if we do see some of these levels break overnight, some of these key levels, I think we're going to get some good trading next week. So hopefully you got the good pips, and we'll get some more next week when the trends start to break out. Have a great weekend, everyone.